Hello, GovCons, and welcome back to the GovCon Funding Podcast. And you may be wondering, okay, I know I need to get some sort of credit facility. Maybe it's from a bank, maybe it's from a private credit source. Now, what's the next step? What do I have to do to prepare to ensure that my credit application is successful and that I have everything documented and ready to go for those discussions with my lender? And we're going to talk about that today. We're going to talk about the specific documents that you need. And we're going to do that with our co founder, Matt Gilman, who's back on the show with us today. And we're going to also start off with the thing that we always like to start off with, and that is our disclaimer. This podcast is for educational purposes only and does not constitute financial advice for your specific business or personal endeavors. Gilman Bagley and the people appearing on this show are not liable for your results from the content we present in this episode. If you want specific recommendations, contact us directly. See our contact information in the show notes or go to gbgovconfunding.com. And while you're there, you'll probably notice that we provide fast and flexible financing solutions to small businesses and lower middle market companies that allow them to access working capital by leveraging their business assets. And we've provided more than $500 million to our customers with fast approvals and sometimes same-day funding. We did all that with 100 years of private credit and business growth expertise. So today we're going to talk about the types of documents you need to have ready before you have those discussions with your lender. And specifically, we're going to speak about private credit today. We're not going to talk about all the documents that bankers and traditional banks typically look for. They have regulated requirements, sometimes known as Know Your Customer, and they have a pretty extensive underwriting documentation, and those requirements are different than what you may find with a private credit lender. But a lot of these may be common with what a bank may ask for. So it's still very good information for you to know, regardless of whether you're seeking funding from private credit or a bank. All right. So Matt, let's start off with the first thing that typically you will have to do, and that's usually an online credit application with the specific lender, with the private credit provider. Maybe we could talk a little bit about what people see when they come to our website at the Gilman Bagley GovCon Funding website for credit applications. But what's typically on that credit application?
Sure. Yeah. So first thing that any bank or non-bank is going to have you do is complete a credit application. And that's not a personal credit application. That's a commercial or a business loan application. And generally what that includes is going to be your company information, where you're incorporated, your business address. It's going to include, most often a debt schedule. So just a list of kind of your outstanding debt that the company has. It's going to include your industry, your estimated annual revenue, how much money you're looking for, what your use of proceeds are. So it's going to be a list of items that are going to give the lender a general overview of your business. And then what's also included in that is going to be the owners and the ownership information. So the lender knows who is it that owns this company, who is it that's the management team, and who's in control of the decisions that are being made.
Yeah, that's great. What about affiliated entities, meaning if they own other businesses or other properties, things like that? Is that typically in this online credit application, or is that somewhere else usually?
Some included. I mean, generally what we find, and at least in our application, is it's really basic information that we're looking to get kind of on the company and the owners, so that we know who it is that's applying for financing. And sometimes at later stages, is where more underwriting questions might come up, right? About, are there affiliated companies or any JVs that are out there? Are there any other past companies that were owned? But usually in the beginning, what you're looking for is a pretty basic credit application. And many times, if you've ever gone and you've bought or leased a car, you're going to see very similar information to what's on there, plus some of the business information that a lender's looking for.
Okay, great. Yeah, so that gives your lender and our team in the underwriting side a general narrative of your business. It gives us kind of that high level view of what type of business you're in, how it's been functioning, who the leadership is. And if you remember from the last episode, your lenders are looking at the management team. That's a big factor for us when we're evaluating risk in our credit determination. So this credit application starts to give us a general overview of the business and how it functions and who's leading it. Okay, let's move on to the next one. And that's the requirement for 3 months of bank statements. I guess some lenders would probably ask for a different number of bank statements, but why are the bank statements so important for the lender to see?
Yeah, and some lenders might not ask for any, depending on what they're looking at, right? For us and for some others, sometimes we ask for 3, 6, or 12 months bank statements because those are usually they're real transactions, right? So like your accounting practices, have nothing to do with your bank statements. Your bank statements is true money in and money out, and that's where we can really get an understanding of, where's money coming from? How are the deposits coming in? Are the ACHs? Are they wires? Are you doing a lot of paper checks that you're cashing? As a company, are you paying a lot of stuff by credit card? Are you cutting checks to people? All of that information is in the bank statements, as well as true revenue. Are there other accounts? You mentioned affiliated companies before, right? Like, is money going out to a third party? We don't know. But by getting bank statements, it helps us get a really good picture of, cash in and cash out.
Yeah, and we'll also see the nature of the transactions as it relates to whether or not the principals of the business, the owners of the business, are living out of the business. Kind of quote unquote living out of the business. Some would characterize this as piercing the corporate veil, meaning, are you using your business to buy things for you personally? And that could potentially be an issue later on down the road. That's probably a full episode in and of itself to really understand what that means. But I suspect that would probably be a factor for us to look at too, right, Matt?
Yeah, of course. We want to bank statements show a lot of habits, right? It also verifies a lot of information, right? You could have a government contractor that is working for the VA, and you get the bank statements, and none of the deposits are coming in that we would normally see from the VA. You later find out they're really a subcontractor to a prime who is working on a VA contract, right? So you can have like these nuances, and the bank statements could tell us. And that doesn't mean the information was withheld. It just means we heard one thing, we look at the data, and it tells us another thing. At the same time, like, it's really important that payroll taxes are paid, right? So some people have one account, some people have an operating account, a payroll account, an expense account. But what we want to see, right, is our payroll taxes really being paid. And you can get 941s, of course, which are important, and we do ask for them at some point. But if they're using a full service payroll company, depending on who they're using, sometimes you see a separate tax withdrawal than you do a payroll withdrawal. So again, it just tells us a lot of really helpful information that excludes the nuances of how you're doing your own accounting.
Okay, great. Now let's move on to the next category of documents we look for, and that's accounts receivable and accounts payable aging reports. Can you explain what those are for folks that may not be accountants or trained in financial accounting?
Sure. So an AR or an AP aging report, this is where a lot of accounting or bookkeeping practices come in, because if you're not properly inputting your invoices, right, or your payables, then that's where we often see that there's a lot of blend between cash and accrual. Is somebody is not putting in their system their invoices when they're creating them in their system and they're issuing them, and then are they tracking them? A lot of people don't put their payables in there either, because what they do is they just pay it by credit card, or they pay it whenever it's due by ACH. So those two reports are extremely important for us because the AR aging report is going to show us who you are working for, how much money they owe you, and how frequently are they paying you. So are they paying you? Are they current? Are they past due? And that's the same thing for the accounts payable report. We're going to see, are they current? Are they past due? And where they are kind of like in that payment cycle.
Yeah. And so just so people can get a sense of what would be a normal accounts payable, accounts receivable cycle, about net 30 days, maybe 45 days. What is typically a normal?
Yeah, it really depends, but we tend to benchmark it against what industry they're in and who they're working for. So oftentimes on a prime contract, you're going to see net 30 terms, and you should see aging reports go anywhere from, invoices that are out for 15, 30, and sometimes 35 days. And if they're a subcontract, or in some cases, if they're paid when paid, you're then going to see invoices that might be sitting at net 45, net 50, net 55. So again, it's kind of a little bit more back to what the benchmarking looks like.
Yeah, great. And that starts to tell us a story of your operations. And, they can start to indicate maybe you have an issue with one specific customer, or maybe you have an issue with one of your subcontractors or your service providers that work for you. And so that starts to fill in a little bit more of the story that we're trying to understand in the credit risk profile. All right, let's move on to the next one. The next one is year-to-date and prior 2 years of P&L and balance sheet. P&L is profit and loss. So we're looking for the past 2 years of your profit and loss and your balance sheet. And we'd also want the most recent of those as well. Can you talk a little bit about why those are important, Matt?
Yeah, sure. I mean, from a profit and loss standpoint, what we really want to see is the business profitable, right? But we don't get summaries, right? We want to see detailed reports, and a lot of banks and lenders do. What they really want to see is how are things being categorized, where are the expenses coming from, what does the profit margin look like, to then determine is this a business that could afford or debt service a loan or a line of credit. And then on a balance sheet, you're still going to see the aging you're going to see not the aging, but the accounts receivable balance. You're going to see the accounts payable balance. And that's going to show you the assets and liabilities that are in that company. If we see in the bank statements, for example, that there is a commercial loan payment or a commercial line of credit, and then we go to the balance sheet and we don't see it on there, the bank statements are going to be the one that's accurate, because the financials are going to be the ones that are done, in practice. So are they doing it the way the business owner is supposed to be doing it?
Yeah, that's great. It's just adding more to the overall story, which it allows us to kind of get a view of what might be missing, what maybe some problem areas could be, but it gives us a sense of a lot of those factors that we talked about in the previous episode, those risk factors that we consider. What is the cash flow on your business? What is the EBITDA on your business? These are the various factors we talked about before. And looking at all of these documents starts to give us a clearer picture. And that allows us to have a really good discussion with the person that's seeking the funding. Okay, so let's move on to the next one. And this one is, it doesn't apply to every situation. It's the last two borrowing base certificates. So Matt, can you talk about the unique situations where something like that might be required?
Yeah, that's really going to be someone that has an existing asset-based loan, or somebody who might have, it really wouldn't apply for factoring, but, sometimes we look for a factoring report just to get an understanding of what data is there that's been provided to somebody else, right? So when you look at what exists on a borrowing base certificate, that's going to be the invoice level detail, potentially other collateral, which could include, inventory, which could include equipment, plant machinery, goods in transit, purchase orders, right? If somebody has an existing asset-based line and they're looking for a new lender, then that report tends to show us, what inventory or what collateral was there the last time they provided information to their lender.
Yeah. This really gives us a sense of the type of relationship that you have with the other lenders that already have a pre-existing working relationship with you, whether it's your bank, maybe it's another private credit provider. That's all very important for us to understand going into these initial discussions. All right, let's move on to the next one, which is the prior 2 years of business tax returns.
Sure. So back to accounting, right? What you have is accounting is going to be how you keep your internal practices, right? And you have your business tax returns that can be filed on either a cash or an accrual basis. So sometimes what we find, or more often what we find, is a company will be filing a cash basis return, and they do their financials on an accrual basis. The accrual basis is showing them the true health of their company, their true margin, and eliminates the aspect of cash in, cash out timing, right? So lenders love accrual, right? Accrual tells you, is this company healthy, right? Does the company make money? Do they have the right profit margin? Are they really in tune with their receivables and their payables, right? We all love accrual, but cash is really what's coming in today and what's going out. So what we want to see is 2 years of business tax returns to understand, not only are your financials telling one story, right, but are your tax returns also being filed telling the government, right, you owe taxes or you don't owe taxes? And then we kind of dig in and figure out what are on the schedules and how the tax returns are done. But they're super important.
Yeah, and you kind of alluded to this. I mean, these are the official documents you're providing to the government. And so there's a little bit more reliability in the reporting on this.
Sure.
Versus maybe some of these other documents, right?
Absolutely. I think Tony's just grabbing a glass of water.
Thanks, Matt. Yeah, I was joking up there. Okay, so I was choking up because this is my favorite, the last one on the list. As a longtime BD guy, this is the one I always love to look at, which is your contract backlog and your pipeline. And can you talk a little bit about why backlog and the pipeline are so important?
Yeah, of course. And then I'll also go into some other documents that aren't on this list. So, especially for us, let's start with more general, right? When you look at all the data that we've listed, banks or non-banks may ask for this information. And a lot of that is telling you the story of the past, right? It's the historical data, the bank statements, the payables, the receivables, the tax returns, the financials. All that is telling you what happened in the past and, what does the company look like? But then, when you look at backlog and pipeline, that's where you start getting into forecasting and projections, as to what is this company going to do in the future. And that's an important thing to understand because, especially in the government contracting world, you can be running pretty flat for a while, right? You can be having the same revenue year after year, some minor fluctuations, and then you can win, a 20 or 40 or 100 FTE contract, and overnight your future goes from you go from a 1 million revenue company to a 10 million revenue company. And that's where we talk about how you're going to finance that. And that's a service and a product that we offer is we're going to help a company look at what their future contracts look like to size a line of credit for them. So that data is really important to everybody because we want to know, what does the future really hold? And on top of that, when we think about what the future holds, we also think about how the data that you've provided and the information about, your projections and your budget and your plan. When you do become a customer and now you get 3 or 6 or 9 or 12 months down the road, do we go back and look and say, okay, your projections said that you were going to do $1 more of revenue, but you did 80 cents or you did $1.50? And that's something where we really try to understand how good is the management team at projecting what their business is going to be able to do. And I think we lost Tony, but he should be back in a minute. All right. While we're waiting for Tony, I can go into a couple more pieces of information the lender will likely see or ask for. Once you kind of get into a second stage of underwriting, you're going to have a lender that wants to see more information that may verify or back up some of the data that was already talked about. So some of that data is going to be, you look at your contract backlog, you look at your pipeline, but now we may want to see contracts, right? We want to see contracts. We want to see the information that supports it. We see the bank statements, and the bank statements show there's a payroll company, but we also may want to see the 941s, right? We want to see something that's going to verify, did you file the 941s and were they paid? So there's a whole lot of things that will come after the initial document list, because as you could imagine, when you provide data, there's questions about data. Now there's good underwriting teams and there's more challenging underwriting teams, right? I think our approach has always been to not piecemeal everything. We try to look at all of the data, come up with all of our questions, so that what we can do is have efficient phone calls and get through the process quickly, instead of going document by document, call after call. It's, can we have a conversation about everything and knock out underwriting so we can get to an approval, we can get to a funding, our customer can get back to the business that they're looking to run, and stop talking to lenders about trying to find capital.
Yeah, I'm glad you said that, Matt, because that's a big value proposition for Gilman Bagley GovCon funding, is we can move faster than perhaps traditional lenders can, the traditional banks can, and perhaps even some other private credit sources. And these documents are really the initial documents that give us the opportunity to establish a baseline understanding of your business, of you, the management team, and how we could potentially move forward. And so it allows us to move faster because we're just asking for these initial documents, gives us a quick snapshot of, is this viable or not? If it is, then we move on to the next phase. All right, Matt. Well, looks like it's time for us to move on from this episode. It's been great talking through these various documents that we will typically ask for those that are seeking credit from us. And you may find that other lenders may ask for these documents as well. And if you have any questions about this, or if you or one of your teaming partners has a need for private credit, maybe they need funding for hiring employees, you've won a new contract, you need to hire several new folks, and you just don't have the working capital to do that. Maybe you need to buy equipment. Reach out to us. Reach out to us at gbgovconfunding.com, and we'll see you on the next one.
Perfect. Thanks, Tony.